Hey guys, it's Robert at LMH Capital Mortgage. I'm putting together this video here so I can briefly show you how important it is to understand your credit profile, and even if you have really good credit, how does that credit fit into underwriting guidelines and programs that you might qualify for. So let's get into it here. I had a borrower here in the spring who was purchasing a house with 5% down. It was a single family house here in Denver. So what I want to show you is how 8 points in this individual's credit score was going to end up costing him over $35,000 on his mortgage. So again, he was purchasing a single family house here in Denver with 5% down. Here were his credit scores on the 9th of April. The lenders are going to take your middle credit score. So they're going to throw out your high credit score and your low credit score. And for this individual, his middle credit score was then 732. So he had really good credit and was not going to have a problem qualifying for the home. This is what he qualified for here on the 9th. He had a 4% fixed interest rate, principal and interest payment of $1,564.73, and then you notice he had mortgage insurance because he only was putting 5% down. So during that application process, in looking at his credit and looking at some underwriting programs that he might qualify for, we were able to find that there was an investor that we worked with that had a portfolio product that would wipe away that mortgage insurance, that $192.63. They were going to take that off of the loan if you had a 740 credit score. So we were only 8 points away from getting that credit score that we needed. He met all the other qualifications here for this program. His debt-to-income ratio was under 45%. He was going to occupy the house as his primary residence, and it was a single-family house. So with minimal effort here in analyzing his credit, we were able to increase his scores here within a little over 30 days. And the only reason it took a little over 30 days is because of the documentation that we needed to get from this particular borrower took about a week and a half to 2 weeks to get. And here were his credit scores on the 13th of the following month, of May. And so this is what he now qualified for. He got a quarter better interest rate. He was able to take off the mortgage insurance, and his principal and interest payment was now $1,517.86. So, you know, realistically, we probably could have gotten this done for him in about 2 weeks, but there was a little hang up in getting the paperwork back. But it ended up getting done here before his close date on his purchase. So in the first year alone, just in payment savings, he was saving $28.74. Over the life of the loan, in interest he was going to save just under $17,000. And then that mortgage insurance, we were able to get rid of that totally, and that was a little over $18,000. So total savings over the life of this individual's loan is a little over $35,000. So again, here were his credit scores in April of 732, and here we were at 795 by the time we were closing the loan. So again, I just want to emphasize the importance of working with somebody who really understands your credit profile and what exactly it is you're trying to do. So this particular case, it was a 5% down purchase. You know, your situation could be different. It could be a refinance, and maybe your debt-to-income ratios are a little off, or your credit score is not fitting into a particular matrix of a lender. So give me a call. There's my contact information, and I'd be happy to review your file with you. Thanks.